Cloudflare offers enterprises cloud services including security, performance and reliability, and developer tools. These are things like web application firewalls that protect web applications by filtering and monitoring traffic to prevent attacks. It also offers performance and reliability features like a content delivery network, which is a globally distributed network of servers that deliver content to users based on their location, improving speed and reliability. So, as you can imagine, these types of services are unlikely to be impacted by the rising tariffs that have been implemented by the United States and then increased by retaliation of the United States trading partners. And so, given its relative distance from the epicenter of the impacts of the tariffs, investors are understandably interested in Cloudflare stock. In this video, I'll answer if this stock is a buy, hold, or a sell at current valuations.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
What I have pulled up here is a revenue chart of Cloudflare going all the way back to 2019, and this is trailing 12-month revenue. This business has increased that figure by more than 4x in the last 5 or 6 years, up to $1.7 billion in revenue, up from around $250 million in 2019. More importantly and more impressively, Cloudflare has increased its cash flow from operations to sales ratio to 23%, up from negative 15% in 2020. This is a trailing 12-month figure. Companies like Cloudflare that offer cloud services are foundationally built in a way that offers investors an attractive potential for improvements in cash flow from operations. These companies don't require large capital investments, and the majority of the investments for these businesses are research and development, which offer potential for great returns on invested capital. They don't require a business that needs to reinvest in capital, maintain warehouses, improve distribution networks, etc., etc. Similarly, the company's return on investor capital has been improving dramatically. It's still negative at 3.62%, but it's up from negative 16% in 2022. And given the features that the business is based on, that has prospects positive for the company's return on investor capital in the long run. In the short run, it might remain negative, but the company has already demonstrated an improving ROIC, and if it continues growing revenue at the rate that it's been increasing, or even slightly slower, I wouldn't be surprised if the return on investor capital turns positive over the next 24 months and then approaches double digits in the next 48 months. So now let's look at valuation. I did a proprietary discounted cash flow valuation of Cloudflare using my own created discounted cash flow model, and the intrinsic value per share I found is $71.33. The current market price is $106. So even though I'm forecasting robust growth in this company's free cash flows from $220 million in 2025 up to $1.6 billion by 2030, the stock still looks overvalued according to my discounted cash flow. The weighted average cost of capital I used was 13.5%, and the company's market cap is $36.6 billion, and it has a little under $1.3 billion in long-term debt. Of course, the current market price is a relatively good distance away from its 52-week low of $66, and the 52-week high was $177. The stock price was tame today's trading, rising just 0.67%. The overall market this morning and this afternoon fluctuated wildly, and Cloudflare stock held up relatively well. Now, when I measured the business based on the forward price to earnings ratio, it looks overvalued according to this metric also. At a forward PE of 102.5, the business is roughly 5 times as expensive as the average business in the S&P 500. So whether I'm looking at this valuation measuring on my discounted cash flow or measuring by the forward price to earnings, the business looks overvalued. Not ridiculously overvalued, because it does deserve a premium valuation. It's already demonstrated phenomenal revenue growth, growing by over 4x in the last 6 years, improving its cash flow from operations all the way up over 20%, improving the returns on investor capital. And it's built on a foundation that could have lucrative returns in the long run. It's a highly demanded service, and given the increase of digitally native products, Cloudflare is in a good position to grow its revenue profitably over the very long term. The trouble is that most investors already know that. This isn't one of those undercover secret type of companies that not very many investors know about, or not many investors are valuing the way they should be. Investors are optimistic about this business, and they've priced it accordingly. So I've been following Cloudflare stock for a couple of years now, and I've had it rated as a hold. And the last time I updated this was a few months ago, and I rated the stock as a hold. And I said pretty much similar things about the business that I said today. It's a great business. It's operating in an attractive industry, but its valuation is too rich to rate the business as a buy. So if you already own this company, I would say there's no reason to sell. It's a good business. Sure, it might be a little overvalued, but it's not ridiculously overvalued. But if you're on the sidelines and you're looking to add this business to your portfolio, I think this is a situation where I would just add this to my watch list and look for it to drop. If I can get this stock at a lower price, at least 10 or 15% lower than where it is today, then I would become more interested in this business. However, at the current valuations, I have the stock rated as a hold. I think it'll perform right along the lines of the market performance. I don't think this business will outperform the market over the next 12 months. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.